Okay, I'm done. All right, today is 11th of August, 2021. Oops, sorry, Wednesday. Sorry, my bad. Hold on, there's a typo error. No one reminded me. Okay, Wednesday. Okay, my bad. Okay, 11th of August, 2021. Today is the Wednesday, and we're going to have our morning MAO right now. Now, I love this quote very much. There's only one side, not the bull, not the bear, right? But the right side. Now, seriously, you look at it from a very objective perspective, all right? Think about this. All right, you can tell me until all the fundamentals of why the Dow Jones should go down. But if the Dow want to go up, it will just keep on going higher. Now, you can tell me all the reason why gold should go up. But then again, if the gold want to come down, I'm just going to stop them. Now, along the last few days, okay, I spoke to some of my friends who are not TWB students, but outside. They tell me that in the entire industry, many people lost money in gold recently. All right, margin calls, busting the accounts and stuff like that. It's quite substantial, in fact. So the thing is this, are they wrong? Well, if you look at it from the long-term perspective, gold has never failed investors. But short-term, the volatility can be a dampener, especially when you're on leverage products. So that's the reason why some people prefer physical gold versus paper gold, because paper gold will move, it fluctuates, and multiply by the leverage involved, then obviously you will have big movement in your balance sheet. But if you buy gold physically, you notice that the last few days, even gold has went down, the physical gold is still holding the same price. You go to any jewelry shop, it's still the same price. So what I'm trying to say is this, is that market itself has its own cycle. And today we'll talk about this in the alternate market views, all right? So when the bulls are getting nervous, okay, you can see on this cartoon, right? This broadcaster saying that the stock market surge and bear and bull are having their drinks together, right? I'm not complaining or anything, but this is nuts. Okay, so what I'm trying to say is this, even the bulls themselves is feeling the incredible movement of the market. Now, this is only can be happening because the US Federal Reserve is putting so much money. But of course, to Jim Cramer, he says that no, this is because the world economy is recovering. So later on, we talk about this, and you guys tell me what is your personal feel. But from this cartoon, really reflects that, right? Bulls are getting a bit worried, all right? Because when you get things are so simple and easy, right? Things get very dangerous. So this is the Wall Street cheat sheet. We call it as a market psychology of market bubbles. All right. So you can see that usually this is how a bull market finish its run. Usually it's all right. It's when the optimism has turned to a belief. And then after that, the trail of making so much money. And when everybody think they are genius, they're going to be so rich, they're going to be the third king of the world. That is usually the euphoria. Now, when the euphoria comes to the top, when will that U-turn? We will never know. So at the moment now, the Dow Jones are still hitting new all-time high. We technically haven't seen this level yet, but we cannot deny that more and more people are actually feeling it right now. They feel that they cannot lose at all. And this is one thing that we have to be very careful. Then when the first pullback comes in, this is the very first pullback. That is where the people, the big boys offload their position. That's the first time. Then after that, people say, nope, this is just a great pullback, let's buy, and they buy on it. And that is where the complacency comes in. And we later on arrive to anxiety, denial, and panic. Now, of course, all these is still too early to call. But what I'm trying to explain to you today is that when you are between thrill and euphoria, right, that is a point whereby you should be looking to take profit and not actually adding on position. We should actually do intraday trading, but you shouldn't add long-term position. And that's my point here itself. All right. So before we start this morning MAO with all the charts and stuff, please understand this. My views is here to just share with you. End of the day, you make your own final decision. Disclaimer as usual. If you continue, you have accepted the above and indemnified me. All right. Clear. All right. So quote of the day. All right. I always define my risk. I don't have to worry about it. Now, this is a very good quote. And we keep on reminding you this. Once you have done your risk management, the rest is let the market decide. Meaning how much you enter is depending on your entry price and the stop loss. And the amount of money you're willing to lose is that amount only. So it's going to be $100 or $200 or $500. That is the amount. So it's really impossible for you to lose more than you can afford unless you did not you did not calculate your initial lot size, or you basically didn't have any stop loss. And that's usually the downfall of many traders. All right. So the first step of every trader should undertake before taking a trade is to define their risk. And I think that seriously, those who have been successful in trading has always been the one that actually has done that. Don't you agree with that? All right, good morning to you once again, Alex Seng. All right, so that is something that I want to share with you before we go to the chart. So the bull goes moo, the bears go grrr, and the lemmings go is different this time. All right, so are we lemmings? Are we bull? Are we bear? Let's watch the market today, shall we? Okay, so now let's take a look at the market right now. We are able to see the China A50. Now, China A50, interesting today. The opening price now is actually marginally above the MA30. And this is a pretty good sign, as at least what we're seeing that now there is news that China is easing monetary policy again. And is this healthy? Well, I already tell you, sometimes in life, you shouldn't take the easier way out. But of course, if they do, there's always a price to pay for everything. So what we are having today is that this is MLP for today for China A50. So it's about 15761. As long as the today MA is quite interesting though. The MA and yesterday is about the same level. So let's just write it down here now. Okay, today the MA is at 15,851. It's almost it's at the same level that of yesterday. Oh, it's the same level, 15,851. And as long as the market stays above this 15,851, we should see further upside on the China A50. But if the market breaks below the MA30, then the MLP today will be interesting, 15,761. Now that's 90 points away, and this level must hold, because if the market basically goes below the MA30 and go below MLP, that is what we call as a crossover. You learned yesterday, right? For those who missed the lesson on MA moving average, please look at the TWB revision Facebook group. All right, it's over there. So if the market do a crossover and go below 15,761, then we may see some profit taking coming down again. Okay. All right. Upside for China A50, it is all possible to this chocolate bar here itself. All right. It is possible. So it is from this level. Let me take a look. This level is 16,379. That's a bit high though, but it's still possible. 16,003. Sorry, I forgot again. Distracted a little bit. 379. Yeah, sorry. Okay, so that is the high. I mean, sorry, the chocolate bar and the MA followed by the MLP. That'll be for today. Okay, all right. Then for Hong Kong, it's going to open in about 3 minutes time. Let's look at the Hong Kong day chart now. Now, Hong Kong day chart, the MA30 is still same because the market won't open yet. So once the market open, I'll withdraw the MA30. But then again for MLP and rest, let me see, MLP will be here today. It's a doji formation. Now this morning, someone did ask me, Cal, normally when we see a doji for Hang Seng, right, next day always seem to be some selling, because we have seen this before, right? Like this, right? The market is doji, next day selling, and next day doji is selling. But of course, if you look at it carefully, this is not the right way to interpret a chart, because you notice that there are also doji, the next day go up. There's also doji, next day go up. So that's why you cannot be like one direction. You have to see overall. And to me, it's rather than focus on whether doji will go up or the doji will go down, I rather focus on doji. Next day, you follow the opening price. If the opening price, the market stays above opening price, you just have to buy. If the market stays below opening price, you stay seller. So that will be easier and more consistent, and the result will be even more favorable to you. Then you pick a side. Can understand? So that's why I say this. It's not about the bull or the bear side that you got it correct. It's the side that is the one that's going to go. If you pick that one, that's the one. So bull and bear, not important. It's the side that you pick when the market is moving. That is most important. All right. So do take note. Today is a doji day for the Hang Seng. So today, I kind of suspect that today we may see big movement day for the Hang Seng. Either it's going to be a sell down, or it could be a big form of rally. So either one of them, we're definitely going to capture some of it. And how do we capture it? We just follow the OP of the day. Okay, remember the OP of the day. Okay, all right, stand by for this. Hang Seng will open in about 30 seconds time. Everybody clear? Are you ready for it? Okay, if you're ready, please keep it ready right now. READY. All right, today will be a good day for trading. I believe that. So today, let's make some money from the market, shall we? Okay, Hang Seng's gonna open up in just a few more moments. All right, you can see that. Okay, I'm gonna leave my screen like this. You will see once the market opens only, you can see that the pivot will jump. All right, so nothing to do with me here itself. I don't key the numbers in. Okay, let's go. Okay, the Hang Seng has opened and you can see that the pivot has jumped. Okay, and this is the opening price of today. Hang Seng opening price is between the two pivot 1, pivot 2. So remember this, the KSI is red in color. So very simple, straight away, you know, right? The establishment is simple. If the Hang Seng goes below OP, it should go to KTR -1 rather easily. Okay, rather easily. If the market stays above OP, then going to KTR +1, if you are buying, then do take profit at KTR +1. So you see the difference over there. All right, because the KSI is red, the terrain is more the seller side. And if the market chooses to go down, then the downside to go down to KTR -1 is relatively high. Okay. All right, so we will watch the market. It's still a bit early right now. The market's not really moving today, kind of slow start. And we're going to look into the China A50 again. China A50 also not moving much, but seemingly supported. Now, do note, I remind you this one more time. The China A50 market went up last 2 days was because there's a monetary easing policy going on, and that is going to push the market, definitely going to push the market. So I'm not going to half deny, tell you that, right? If the Hang Seng goes up, right, okay, because of this artificial pushing, it is very, very possible, okay? So traders, you just have to be mindful on that. All right, so we are still kind of slow today for the Hang Seng. Let's take a look at the Hang Seng in the 5-minute chart. Yeah, indeed, it's kind of slow movement for today. Right, pretty slow, but still my point is this: if let's say the Hang Seng is to go down, it should go down to KTR -1. KTR -1 is at 26,310. Okay, 26,310. So I already tell you my personal take on the Hang Seng. I believe that it should go down to 26,310 rather easily today. Okay, that's my personal view on the market. All right. Wait a minute. Okay, messages coming in again as usual. And text them ready. If you want to really short the market, you can look at 26,310. That's if you want to do that. Okay, all right. So we will let the market decide, then we will execute accordingly. Okay, so we have that for Hang Seng. You guys do what you need to do, okay? Okay, I'll come back to this later. All right, so what we have now is that we let's look at the Dow Jones today. Now, Dow Jones today, yesterday we saw a new all-time high, which means that, you know, the market is not peaking yet. But there's a problem here. Everybody, do you notice the little problem there? Do you notice what is yesterday's chart? Do you notice what yesterday's candle looks like? Can you answer me? Yesterday, Dow Jones, the candle, what does it look like to you? Can you answer me? Yeah, wait for your answer. Now, the thing is that I can finish my MAO in 1 hour, but because we want interaction, we are here because we want to learn. I know that recently, because of COVID, everybody is not even going out to have their own dining, right? So to ask you to come to office is going to be a bit dangerous for everybody, okay? So that's the reason why we rather have our conversation on this MAO. And of course, those people who cannot join us MAO in the morning, they can learn it during the afternoon or evening. So that's the reason why we kind of like stretch the MAO a little bit longer so that you guys can learn something out of it. Okay, all right, the answer is correct. Min Hui and Fred, the answer is correct. This is actually a BMB, big movement bar. Okay, so now let's us redraw. Okay, so first of all, we know that this is a BMB, all right? This is a new BMB. So a new BMB that happened on historical high is something that we don't really favor. Okay, because normally itself, right, if it's historical high and a BMB, traders should be very careful. But fortunately, the candle is a white candle, so not so bad. If this is a black candle, that means closing below the opening, and it's a BMB and it has historical high, that one we usually get a bit worried. Okay, all right, so that is the first thing that we need to take note of. Second thing will be the MLP now. Now the MLP for today not drawn to scale, meaning you have to do your own drawing to be precise. It's somewhere around 35,185. I repeat, 35,185, not drawn to scale. All right, so which means that as long as the Dow Jones stays above 35,185, the Dow will still continue to much higher. Now the MA30, as you can see over here, MA30 is 34,962. So which means that the market is kind of still far away from MA. So it's kind of positive. And because it's a new BNB, I can't give you any more stuff to inform you where the RL and SL. But then again, that means that we could see a higher movement on the Dow Jones. Well, relatively another, how many points is that? Let me just take a look. That means that if the Dow is to go up, right, Dow can go up by another 245 points. Okay. Now it can go for 245 points, or it can go down by 245 points. Okay. Now you go down by 245 points, it will break the MA30. So that's the reason why, if you want to ask me this question, right, I rather not chase. I repeat, I will rather not chase unless the rule calls for buy. If not, right, if you are going to buy on the way down, it's very dangerous. I repeat, do not buy on the way down, right? Try to buy when there is reason to buy, example, set up to buy or trigger something to buy, then you purchase. If not, right, when the market's all-time high, the BNB, and if you notice that if the market do flip down one extension, it will break below the MA30, and that's not a thing that you want. If you want to buy, maybe may I suggest to you is that when the price goes to MA30, around that area, the vicinity around the area, then you buy. Then it'll be safer for you, okay? Because you have seen before that it has happened before. Whenever you hit the MA30, it usually will rebound, right? So that's the reason why I say that you should look out for the buy based on MA30. So now it's a bit far away. Don't engage fire. Are we clear with this? If everybody is clear, please key MA30, right? If you heard me loud and clear, please key MA30. Okay, I'm going to write down numbers for you all today, okay? Okay, all right, remember that, I've given you I've given you the numbers already. You also replied me accordingly. MA30, just take note of that, okay? Remember, buy only when the market pulls back to MA30, and then it has to stabilize there before you can look for next buy, okay? You don't just jump in and just buy. Don't put a buy limit order there. It's very dangerous. You can go slightly through, so don't. Just put a call level there to remind you when you reach that point, just watch the market, okay? Just watch the market. Okay, good. Thank you very much, guys. All right, so let's do a weekly chart wise. Weekly chart is still beautiful. The market is still hovering. Now, yesterday, someone texted me on the site, a standard student, asking me, Cal, don't you find that this entire bull market is a bit funny? I say, why? Now, take a look, Cal. He said this. When the bull market was going up rally from 2018 to 2020, okay, the bull market extended all the way, all right? Then when the bull market collapsed because of pandemic, you notice that there is a little bit like the RSI moving a bit like divergence. I say that no, look at it carefully. There is, if you look at this, unless you say this point, so unless that you are talking about, you take this point here, and this point here, if you look at it, yes, then we have the divergence, which means that the market goes higher, but the RSI reading goes lower. Now, this is the very traditional RSI divergence. But if you look at it from another angle, actually from this point here, the market RSI is going up. So it's again based on how you see this, because you look at it now, right? This high is actually higher than this guy here. Right, A high is higher than B high. So by right, A should compare to C. And if A compared to C, the RSI is going upwards. So actually, it's really a matter of perspective. If you want to insist B and C are related, then you notice this divergence, and that causes the market to sell. It's like basically not following the right rules. Because if you look carefully, A to C is actually a uptrend, and the RSI is pointing upside. So that is my point. Okay, but nonetheless, I say I appreciate my friend who shared with me. I told him say that okay, I'll look at it. The only thing that I will say much more consistent will be this one here. Okay, let me show you the more consistent area here. All right, the more consistent part is this. Look at it. This is going to be the drawing right now. Oops. Wait, what happened? Wait, something went wrong with my. Okay, wait, okay, wait, something went wrong with my Facebook. Let me refresh my screen a little bit. But nonetheless, I'd say I appreciate my. Okay, all right, back again. Okay, so if you look at it carefully now, this is the first wave. Then you touch the line, right? Second wave, touch the line. Third wave, touch the line. Fourth wave, touch the line. So you can see that, right? If you look at it from the wave higher momentum, right? This is something you can see now. It's getting actually, if you want to argue with that, then indeed A is higher than B. B is higher than C. Although the price may be going higher, but the strength is actually lowering. So if you look at it from that point of view, then the answer is yes, this is on hindsight. There could be some selling pressure here. Okay, and of course, come with the RSI at the 75 mark. Traditionally, it's a sell. So with that, then maybe we can see something like this. Okay, so you got an idea now? Okay, all right. So now let's us push back the tape and we see what's happening right now on the Dow Jones. Okay, now this is the short-term trend line. So I'm going to draw the long-term trend line now. Now, everybody take a look here. Can you see this? Okay, can you see this? All right. Now, if I put this chart in, you will argue that, hey, how come this is like that, right? So we cannot really draw this way. But if you look at it from that's not what I showed you. This is the first wave, touch. Second wave, touch. Third wave, touch. Fourth wave, touch. So you notice that by the time the fourth wave happened, right? That's why this particular week, the market actually collapsed. And that week itself, right, the Dow Jones was down by how many points? Let's take a look. The Dow Jones was down by 1,300 points. Yeah, one single week, the Dow Jones dropped by 1,300 points. So you got an idea now? Okay. So, but after that, you know that Federal Reserve came in to buy up again, and of course, the Dow Jones went to all-time high. So that is how the Goddaddy does it, all right? Okay, so now we have seen this drawing. Now we draw it another way right now. Okay, by the way, my side is raining. So if you are outside, be careful. All right, it's pouring, in fact. Yeah. I'll try a different color for you. Okay, so now if I want to put it into retrospect, right, to suit to the current trend right now, okay, it's a bit forceful to draw this way, but that's the only way you can draw without going against the rule. Then, of course, you can see in a very crazy manner, this is the high, this is low, go all the way to the high, then it pulls, then it goes up, it pulls, and now it goes up. You see that now? Now, if I were to draw and complete this thing here, this is A, this is B, and this is C. Now, if this is to continue in this manner, then C is theoretically lower than B, and B is lower than A. And if you put it all together, it's all right. It's something similar like what we saw right here. Okay. So of course, this one we have actually a so-called a D extension. So we have A, we have B, we have C, we have D, and then that was where the weak market broke. So will we see a D later on? I don't know. But definitely itself, right? We are definitely at a very dangerous area that I will believe that traders should be very careful moving forward. Okay, so everybody clear on this? Now, this is not wave calculation. This is not yacht wave. No, no, no. This is just my personal way of drawing charts in the most traditional way that I've been using for really long-term trending chart. Okay, all right. So everybody, you like this sharing? If you like, please key the word LIKE, like. If you don't like, just put the word X, the letter X. All right. So this is my way of seeing the chart. But of course, my friend's telling me that, Cal, but you look at it, this point here and this point here now, we are seeing a bit of divergence, right? The market is going up and the RSI is going down. Okay, this is fine. This is really a divergence. So if the market do a C wave or D wave and the market do RSI like this, and this guy is lower, continue to go lower, then the alarm bell will definitely be there. I repeat myself, if the market do go up a bit more and the RSI reading is even lower than the last one here, okay, then that means that, all right, X could be X and Y. If you compare and contrast with the market, then this is a pure divergence. Then I will say that traders must be very, very, very careful, okay? Absolutely careful, but again, still, we are not there yet, okay? I repeat, we are still not there yet, okay? All right, try on your own. You may find it interesting. Anyway, anything you draw is on your own. You don't need to answer to anybody. I'm just sharing my personal view. So if you look at it right now, right, if I put these two lines together and contrast, we can see that the short-term trend line is holding up the market very well. The long-term is the one that we just draw. So the intersection point, apparently, if you notice this, the intersection point will be September the 5th. The intersection point is September the 5th. Sorry, you may not get to see the intersection point. I'll try to put up later through our thing. So what I'm trying to say is this: if the market is to have any form of like a prelude forecast, then September the 5th, that particular week will be a very interesting week to watch out for. Okay, I'm gonna write it down for you guys. The week, September the 5th. So 5th of September week. Okay, so we will look at it when the time comes nearer. Anyway, we'll see. All these are just, you draw, I draw, everybody draw. So we will know exactly, how accurate will this be, okay? All right, I saw the Hong Kong is going up right now. Let's take a Hong Kong right now. Okay, Hong Kong is going up a little bit. Let's take a Hong Kong chart. Oh, China A50 is going up. Yes, indeed. China A50 is going up. That's the reason why you're seeing this happening right now. China A50 is going up. That's the reason why. And let's look at Hong Kong. Okay, Hong Kong market just now. You see that? Once the cash market open, one movement, it creates and break above the KTR +1. So it couldn't go down. It couldn't go down. Halfway mark only, couldn't achieve that. And straight away U-turn and straight away blast up higher. And I mentioned to you itself, right? Because of the China A50 and momentum, there is a fine possibility that the China stock may be pushed up. And if it push up, that will create the momentum for the Hong Kong market. So you can see this was exactly what I mentioned earlier. So too bad it did not go down. It did not. So it went up. So for those who short the market, hopefully you know to flip around and go for the buy for KTR +1. Yeah? Okay, yeah? Okay, so you can see that the China A50. Now I repeat myself the third time, it's the monetary policy that's going on right now that's pushing the China A50 market. So only if the market stays below the MA30, then you sell. If not, right, the market is going to go up for this China A50. It's something that you have to take note of that because there's artificial support right now in the market. Okay, so we have the weekly chart done. We look at the Dow Jones for today. Okay, so you can see that it's kind of getting tighter every day, but I have to do that. Okay, so you can see today's the opening price is actually between the two, pivot 1 and pivot 2. The KSI is green. So if the market stays above OP, relatively they expect that the market will hit the new all-time high, 35,348. Okay, that is the new all-time high. Now, if the market goes below OP, then the support will be at 35,211. But because the KSI is green in color, right, the problem is this. If the KSI is green, the downside will be limited. And we have been seeing this quite often. In the morning session, we see the Dow go down first. Then after that, before the European market, it go up already. So this is something that we've been seeing for quite a while. So that means that every time the US market, the market will go up during the night market. Then after that, in the Asia market, they may purposely take some profit, attract short sellers to go in. Then they come in to buy and they push the market higher. Now, of course, this is just only a sharing that I've been observing, but it doesn't mean that today will happen again. We just have to take a note. So in this case right now, the KSI is green in color, right? So as long as the market, the Dow Jones go down to KTR -1 to -2, you can consider to buy. So now let's take a look right here. The KTR -1 is here, which is about 35,127. So it's quite far away. All right, it's still quite far away. So we wait for the market to be clearer. But if the market goes below OP and pivot 2, then there will be some selling. There will be some selling. But once it sell down, right, I will appeal to you at 35,127. Do consider to buy back some of your shorts. Okay, because I repeat, because today the day chart KSI is green in color. Okay, right. Thanks again, Fred, for updating us. Okay, so are we clear with this? Yeah, indeed, huh? Okay. China A50 is still going higher. You can see Hong Kong shares is still going higher. Yep. You can see Hong Kong now. It's still moving up. This is the 15-minute chart. This is a 5-minute chart, and it's going to hit the KTR +1 already. So when you have artificial support coming in as well, right? No matter what you tell me, it doesn't matter anymore. Just follow through. That's why I keep on saying this. Remember, never fight with the government funds. No way to win. Okay, this is absolutely common understanding. Okay, all right. Okay, so we have the China 50. Let's look at the Nasdaq. Now, Nasdaq, I already want you to be a bit careful because three things. Number one, you notice this, guys, the one that created the high recently is actually a BNB. You notice that? The one that created a high on the August the 6th. Yeah, August the 6th. The high was 15181.12. Is higher than the one before that by 0.5 points, and it's a BNB. And I told you before, if the market is a historical high and it's a BNB, be careful. And now we have another BNB created yesterday. So which means that we have two BNB side by side one another. I repeat myself, we have two BNB side by side one another. So there's a BNB here, there's another BNB here. All right, now two BNB side by side usually means the market is going to go into big movement soon. Now with the earnings that are not, it's fantastic, but the next quarter they're expecting a lower number. I cannot see any other good reason for the Nasdaq to go higher. I cannot see. And if let's say there's going to be any form of tapering, right, it will affect the Nasdaq counters. So I can be upfront with you, I'm pretty bearish with Nasdaq. Okay, I'm going to be upfront here. This is the first time I write it down like this so openly. I'm pretty bearish with the Nasdaq. Bearish. All right, unless something changed dramatically or some other factor came in that we doesn't know, then of course I'll change it. So that's why when I saw Tom Lee is so bullish on the S&P 500, right, I went through everything I can take off. I cannot find really any reason. So other than just motivation of funds, which means that if the funds going to come in to buy, then that's the only reason. So for Nasdaq, I will say that the current two BNB make me pretty bearish. So I'll be watching the MA30 very closely. The MA30 will be watched very, very closely this time around. Now, how do we utilize how do we utilize this? Very simple. Today, the MA30 is 14,980. Okay, 980. So which means that if let's say the MA30 is not breached, still long is still okay. But if the market breached 14,980, then we do suspect that there could be some profit taking to come. There could be some profit taking to come. And the new BNB will be structured here. This is a new BNB. To put it in. So that means that if the look at it, new BNB, right? So if the market, if it goes below the SL of this BNB, it will breach the MA30 and that will lead to some selling pressure. So I kind of suspect that today we should see some selling on the Nasdaq this these few days. But once the market go below, if you notice for Nasdaq, right? If you notice this, whenever the market breach, excuse me, breach the MA30, there will be artificial buying every time. Can you see that? So that's why I cannot deny this. Even we sell the Nasdaq, once it go down to 14,980, right? We will see intermittent buy up because they have been proven. Unless this whole movement now is caving in, then we may see the market really go into a form of profit taking beyond the normal. And this may bring the market down all the way to this point here itself. Okay, can you see that? It may bring the market down all the way to this point here because this is the previous neckline. This is the previous neckline. Can you see that? So this level, as you can see, what level is this? Yeah, this level is somewhere near to the 95 region. The 95% region, or maybe to be precise, is 14,510 level. Okay, so I can write it down for you. Nasdaq, I am feeling bearish on it. MA30 estimate is at 14,980. Potential downside is 14,510. Okay, so I've given you my personal take on the Nasdaq, so you guys make your own decision on it. Okay, clear? Okay, so that is the Nasdaq. Hang Seng pulled off from KTR +2 already, but still too early. Okay, some profit taking again as usual. Okay, now today Nasdaq, we can see the new zebra, red, yellow, red, yellow. So which means that I have to put in the lines. This is the high. This is the low. So which means that we have a zebra formation, and this is about 174 points. That's not a lot. So, well, we will watch it as it goes along. Okay, so for today's Nasdaq, excuse me, the opening price is between the two pivot. The KSI has already turned rate for 2 days already. So again, same thing. If the market goes below OP, I kind of suspect that the Nasdaq will go down to 14,981. That will be somewhere very near to my MA30. I just mentioned to you 14,980. So it seems to be in line, right? So when things are in line, usually things may happen. So I'm going to suspect that today, the Nasdaq should be able to come down to 14,981 later today. 14,981. Okay, so now we are about probably 70 points away. Okay, that's the first take first. Now, if the Nasdaq stays above OP, then of course, it should be able to go up to 15,103 rather easily. Okay, rather easily. So this is a very tight squeeze range, but at least now we can be very clear on what particular direction we can look out for. Okay, clear? All right, so that's the Nasdaq. And of course, the next one, the last one will be S&P 500. Now, S&P 500 is the one that we were joking about it. We say that, right, it's very difficult to see 2 doji, but unfortunately, we saw it yesterday. Okay, so what do we see for 2 doji? Take a look. This is 2 doji, right? Can you see that? Okay, the last time we see 2 doji was here. The last time we see 2 doji was here. Can you see that? Okay. So what do we see after the 2 doji? Well, you can see that once this, if you take the high and the low of the 2 doji, once it crosses the high, the market generally goes up. Okay. So vice versa, same thing again. This is the 2 doji. All right. You can see the market got supported. Then after that, once it goes higher, it goes higher. All right. So of course, I cannot deny this to inform you that this 2 doji, the high, which happened to be the historical high at the same time, right? If the market goes above the historical high, we could see another higher level. It will easily see 4460 to 4480 level. We should be able to see that. Yeah. Wait, some again, my Facebook got some error again. Not too sure why. Okay. This Colin say after it goes up, then it goes down, right? Well, if you look at this one, it didn't go down like a bit lah, go down a bit then go up lah. So not really exactly true, but just take note of that. So too doji is never a good sign. Definitely bigger movement is on the way. So with all what I collected earlier itself, right, I kind of suspect that the key mover will be the Nasdaq. The Nasdaq will likely be the key mover lah, because if Nasdaq is the one that brought the whole entire market up. So if Nasdaq take profit, right, definitely the rest will likely be following. Yeah. Yes, indeed. The last two doji lah, the market go down up first, then come down. Yeah, but that's aftermath already. So aftermath can be more than doji already. It could be something else. Yeah. So again, charting is always an individual thing. If you see that you see up, then you see up. You see down, means you see down. Right? Not going to imprint on you. Okay. So for today, let's just take a look here. This is the doji. So that's why we knew that we will have our MA30. Sorry, we have MLP. So MLP is somewhere around here. Okay, so we have 44.36 level again. This is the same level that we talked about yesterday. Plus it's two doji, right? So the MLP is 44.36. That is the MLP. Okay. Then we have the, let's look for the BMV. I think still the same one, right? Yeah, nothing has changed. So it's still above the BMV RL. Okay. All right. So that is the thing here. So watch out for bigger movement from the conventional chart. Okay, let's look at our TWB chart. Now TWB chart a bit different. You can see that we have a KSI that is green. So it's not favoring the sell. It's green. So it's favored a buy. And the market open is between the two pivots. So upside potential is still going to be new all high, 44.51. If the market goes down, the low should be about 44.30 unless the market loses it. Only if the market loses 44.30, then we may see some selling. But the problem is the KSI is green. It's going to be very difficult. The downside is going to be very difficult unless the Nasdaq cave. That will change the whole story. Okay. All right. So this is all the US market. China A50. Let's take a look. Well, it's still doing pretty okay. Hong Kong is also okay near the high. So everything looks good. Now, Hong Kong MA30, I didn't do earlier. Now, MA30 for today, Hong Kong. All right. The number is 26,626. So as long as Hang Seng doesn't breach above 26,626, Hang Seng is still technically on the downside, technically. All right. So, but again, if you look at the low end, we're very far away from the low already. So that's why below MA to short or long is not accurate. You have to do what I shared yesterday is the touch or the crossover. That is the most powerful one. Okay. All right. Okay. So I've completed the equity market for US and China and Hong Kong. Let's look at Japan. Now, I already told you that Japan, if it stays above the MA30, it will be a buy. And indeed, it's really happening live. And you can see that once it crosses over, the Nikkei continue to much higher. So that's why for some people who use MA for trading, they do get a rather good result. Because first of all, they don't trade every day. And when they trade, they make sure they make money. And that's what you can do and consider. So for those people who are asking me, Cal, can I trade lesser and make more money? Then you have to listen to what I shared yesterday about how to use the moving average the right way. In my opinion, that's how I utilize it. And if you do that right, you won't need to trade every day. That means that any days the market bang down 1,000 points, got 1,000 points, got nothing to do with you. But the day that you're supposed to be involved in trading, you have to be involved, you have to trade. And of course, if you make money, congratulations to you. You understand my point? Yeah, so this is actually pretty decent for people who do that. So for people who want to, look at this technique, right, you can actually look at what I shared yesterday in the video. All right, so in short itself, right, the market is above MA30, so that's why the market is kind of bullish. It's above MLP, and this morning it purposely touched MLP and then recover. You see that beautifully, it touched MLP and recover. So all these are telltale sign of upside. Okay, Now, of course, you may say, how come the Nikkei is going up? Well, the dollar is going up. The dollar basically suppressed the yen, and the lower yen is always favorable to the Japan stock market. Now, what will it turn down? If let's say the yen, if suddenly the dollar weaken, then the yen increase in value again, then of course the Nikkei will become profit. Okay, so got an idea? Yeah. So that is the Nikkei. Now, Hang Seng has pulled back down from the high. Hang Seng has pulled back from the high. So if it goes below OP, I'll just write it down for you first. Only if. If only it goes below OP, then I can be very sure it will go down to KTR -1 rather easily. Only if. So I repeat, only if the market goes below the opening price, then we can see going down to the 26,310 level. Only if that happens. Okay. All right. Nikkei. Okay, so Nikkei is a bit, okay, it looks, again, look at it, when it comes with your TWB chart, it looks different, right? Now, the KSI already been green for a while already. Can you see that? So that's why the market bottom out and start to go higher. So that's the reason why traditional indicator and our TWB indicator got very big difference, okay? So when the price is coming down, we should be looking to buy. And when the market break out, right, that's why you buy. So for those PDP students, you'll learn something like this. This is called the LHF and HLF formula with the KSI, okay? All right, so for today's Nikkei, as long as it goes above the pivot 2, it is a buy, right? Because KSI is green, above pivot 2 will be a buy. All right, so that is what you should have done today. And you look at the 15-minute chart, you can see very clearly that it was initially morning, it doesn't move much because it's still no cash market. But once the market cross over the above pivot 2, CCRY above OP, straight away the Nikkei shoot up. And when it shoot up, right, what is incredible, the Nikkei not only shoot up, it hit the KTR +2 perfectly, as if that they know it exists. And then before you know, it pulls back down all the way to the OP price, okay? All right, so again and again, if you imagine you know what to do, you take some profit at KTR +1 and KTR +2. You know why? Because the day terrain is green. That's why the day terrain for the KSI is green on the day chart. So that's why hitting the KTR +1 or +2 is kind of high chance. You understand? So that's how it works. So imagine that if you can tell somebody to in Japan, tell them, say, okay, the first target is this price, 28,035. The next target is 28,119. And the amazing thing is that the market really hit the high and stopped there and reversed down. Wow. I think you'll be very, very wow. The guys around you will be very impressed by you. Okay, got the idea now. All right, that's how we utilize and trade with our TWB system. Okay, all right, so that's Nikkei. So with all this thing, I covered all the indices already now, except DAX, right? Now, DAX, I already told you guys that DAX, it has to break the all-time high before it go higher. But yesterday, it touches MLP and then recovered already. Now, DAX most likely, in my opinion itself, right, will likely touch the all-time high, touch it and create a BNB and then pull back. Because I say DAX is also have been struggling to go up. You can see that this is the triple top already, right? For those who like triple top, this type of stuff, this is like a triple top to me. Okay, all right. So if you look at it in terms of magnitude, things can get a bit ugly. Which means that, right, if let's say if the market really do a triple top, then the market could pull back all the way down to the MA 200 because this is what happened the previous time. It got lower. So by right, it should go lower this time around. That's only if, let's say, DAX do see any form of selling. But at the moment now, we're still pretty cool. There's still a lot of money pumped into the system, so it's kind of be tough. Okay, done. Let's look at the gold market right now. Now, gold has been sideways, and yesterday we have formed a doji. Yay! So yesterday we saw gold form a doji. So by right, today we should see a directional day. I repeat, today we should see a directional day. Now, directional day doesn't mean that it had to be up or down. If you choose to stay above OP, it'll be up. If it shows below OP, it'll be down. Okay, so that is something to take note of. But of course, look at the way it opened up its mouth over here itself. This is a very big movement. All right, if you remember this happened before in China 50, it happened before in Hong Kong, and that causes the market to fall. So guys, opening up so gigantic result, right? It will take some time for the market to grind before it moves. Okay, it takes some time for it to grind before it can move. So traders, please give some time for this. Okay. All right. So that is the first thing first. So if the market stay above OP in general perspective, I do see it go up to 1762. Now, of course, 1762 cannot be done in a single day, at least for now. Maybe a couple of days. Then gradually it may stay above 1760. It may go towards 1762. But of course, that is only if, let's say, it stays up. If the market, instead of going up, it chooses the downside one, then of course the next number is 1689, which happened to be the last number previously when it hit the 61.8. Remember that? So for those who remember that, but when the price came down, no one dared to buy, that is always the case because you did not do your risk calculation. If you had done that, then you will not be bothered. Then you will know that you can actually consider to buy. All right, that is one thing about risk trading. Okay, so that is the levels for gold for conventional. Let's look at the weekly chart. Is still the same. Nothing much have changed. Okay, so this is our TWB chart today, and it seems to give a clearance here. Well, the opening price today is above pivot 1. So by right, above OP, CCRY will be a buy. Above OP, CCRY will be a buy again. The KCX is still here. So overall it's up, but the only dampener is that now there is the KSI is red and the blue bars are still around. So which means that when the price goes higher, right, you will face resistance. Just like yesterday, you saw gold, right? It went up, but once it hit KTR +1 or +2, right, there is some form of resistance already. So by this for now, above OP, above pivot 1 is a buy. I repeat, for gold, above OP, above pivot 1 is a buy. Okay? All right, so let's look at the 15-minute chart to see something clearer. Now you can see that gold came down, broke below pivot 1, then instantly did a CCRY. Now I told you before, right, color change on pivot is the most powerful. I repeat, when you see color change happen around the pivot, it's most powerful. So by definition, this is a buy, right? CCRY, and the KSI turned green, and of course above OP, above pivot 1 is a buy. So now it's above OP, it's a stronger buy. All right, so you heard me loud and clear. Yeah, for gold, as long as gold stays above OP, it's a buy. Okay, all right, must have CCRY, of course. Okay, all clear? Yeah, indeed, all clear. There's some messages coming in again, as usual. Okay, gold is trading higher right now already. So for those who are gold lover, you can consider to look at gold right now, okay? For those who are gold lovers, you should consider looking at gold right now. Yeah? Yeah, sorry. Okay. Okay, all right, so that's gold for you guys. All right, let's look at the silver. For silver, you can see that it's still going down today. It's still going down today. All right, it's still going down today. So what we can do is that for silver, it's going to be a bit tougher than gold because I say gold is much more precious metal compared to silver. Hence, therefore, investor will prefer to keep gold over silver. But for speculative reason, if you want to buy silver, it's cheaper. And of course, the upside potential has been said before is $50. So some trader will say that it's better to buy silver. So again, it's a individual thing. For me itself, right, for silver, you can buy some, but the concentration should be on gold, okay? All right, Colin says that today the CPI data today, should we wait? Well, like I say, Colin, the data is 8:30. As long as the market calls for buy based on technique, we don't really need to bother about any form of news. News is something that you must take note, just to remember that at this time, there could be volatility. So usually what we do is that we can, based on rules, we can buy or sell first. And then once you go nearer to the timing, if you're not comfortable or you think that the market may swing against you, then you either take some profit or you SWL. Because if you wait for CPI, then I think you wait for PPI, that's wait for another one. So every day you're waiting. So it's not really necessary. Only non-farm payroll day, because the market hardly moves. That's why we don't trade on non-farm payroll day. But prior to that itself, right, we do that. Wow. Okay, Hang Seng has broke pivot one. Fantastic. Okay, Ezoro broke the MA30 also at the same time. Wow. Okay, incredible. Huh? So this is the power of money. Hey, China 50 hardly didn't really do much. It's China, Hong Kong itself moved up itself. Okay, all right. So that's how it works. US side, nothing much change, but the Hang Seng is the one that shot up. Woo, wow. After it shot up, only pull back so fast. Okay, all right. So there's some form of resistance, as we say, the MA30 out there. Yep. Okay, so we have that. So it's still very, Hong Kong is very interesting, if you actually can see it. Okay, all right, so that is the gold and silver forecast. And my point is this today is still, my point or goal is that it's doji, so follow the OP. Okay, just follow the OP, you should be fine. All right. For crude oil, interesting, yesterday we saw crude oil going through, recovering all the gap up movement. So really crude oil hit $65, really meant, really stay there. Now, not too sure how many of you bought crude oil. We mentioned, right, if crude oil hit $65, can buy. And if you buy now, you are up by $3 profit already. That's a very good profit, right? So that's the reason why, again, the usage of the MA30 to your advantage is going to be very important, as long as you must know how to utilize it. So for crude oil, what do I see right now? Take some profit. Okay, I'll repeat. I want to tell you this. My point is this: take some profit on crude oil. Right? We have bought it at the right place. Now take some profit. Okay, take some profit. Okay, why do I say that? Take some profit because the KSI on the day chart is red in color. The day chart KSI is red in color. The bars are still red in color. It's good to take some profit. Okay, so I suspect that crude oil may come down. Okay, some later today. So take some profit. TP, okay? TP. All right, take profit. Okay, all right. So I covered that. Ah, man, hold on. Okay, all right. So that is the crude oil and stuff like that. Okay, so all clear on this. All right, so I covered all the market for today already for technical side. Finish up on the dot, exactly 1 hour. So if anything else, we can discuss in the group chats. All right, so we're going to go in the fundamental. We take a quick 15 seconds break. 15 seconds break. Okay, I'll come back. I need some water first. Oh. Okay, guys, I'm back. Let's continue. All right, so now we're going to go into all the technical and fundamental. Sorry, sorry. We completed the technicals. We're going to the fundamentals and some of the alternate market views. All right, so today alternate market views towards the end. There's two slides that is quite interesting. It's the high yield curve versus S&P. That one is quite interesting. We will talk about this later on. Okay, let's go. Okay, so today we have indeed the CPI, the core CPI data. Now, I suspect this core CPI data to be higher than normal, in my opinion. I suspect that it will be this level today. Okay, my personal take. Now, crude oil inventories, I don't really cover. It's very hard to decide. Okay, but I suspect the core CPI to be up today. And this should be the one that spooked the market a little bit more today. So traders, kindly take note of that. But of course, if the core CPI data is low, then of course the stock market will continue to rally. Okay. Now the Dow Jones, as we can see, as usual, after the first 1 hour burst, it goes sideways, and then after that, for yesterday, it was really sideways all the way for the entire day. That's why the Dow hardly moved, but in the morning already it had to push up already. See, morning is US morning. Oops. Hold on. Okay, so the Dow Jones closed 160 points higher because apparently the Senate has passes the $1 trillion infrastructure bill. Now, this is something that we've been waiting for, and finally it's here. So that's why there could be some profit taking, because the market have been waiting for this. And of course, we all know that it will go through because that is the Senate, which is like, one-sided. So basically, right, we see the Senate passage of $1 trillion infrastructure package boost up stock market, tie up to economic growth. So counter like Caterpillar will definitely be enjoying this because they are very linked to all this infrastructure play. And of course, Nasdaq will come off a bit because that means that there is a possibility of tapering because now the yields are going higher. And of course, the other counters are all going up, but primary is banks went up, energy also went up. So you saw what happened, right? And obviously, all those economic reopening counters like Norwegian cruise liner, American Airlines also went up. So you can see that one day up, one day down, one day up, one day down. It's just basically being played up. Whichever day they want to do, they want to say anything, they just have to do the opposite. So example, they want to buy the Norwegian Airlines, Norwegian cruise liner. They will tell you, okay, COVID. Then the market comes down. Then they buy. Then next day they tell you, say, okay, no more COVID. Let's continue this. The market goes up to make money again. So the market is making money every day doing all this direct manipulation. There's really no value inside here at all. Everybody just putting in numbers and stuff, and then they just have to make money every single day by doing this buy up, buy down. All right. One counter that people are looking at is AMC. They're looking at AMC to go higher, and because AMC also announced that they're accepting Bitcoin. And by Bitcoin today, after it go up, right, I did mention at 46,000, I did tell people on the Bitcoin group to take profit because I suspect that there will be profit taking on Bitcoin, and it really happened. All right, so that's the reason why I kind of suspect that this will happen. Now, if Bitcoin do fall, right, undeniable, there's half of me telling me that it could actually go for gold. That means that Bitcoin and gold, right, had this interesting relationship recently. If Bitcoin goes higher, gold go down. If gold goes up, Bitcoin comes down. Now, it's not 100%. There's no relationship, but it's just that recently the pattern happened to be like this. Okay? All right, so look at this is the Dow Jones yesterday recap. So very clear, KSI is green, breaks above P2 is a buy. So in general, the market was sideways, then it went down, but it was not even close to go to KTR -1. Can't do much. The moment it crossed the opening price, and obviously you can see that the BNB came in very big here. Now this BNB, of course, is already far away from the CCRY, but if you put the two lines over there, you'll know why. When the market breaks above the P2 and above the BNB, straight away, instantaneously, the market goes up. Now, what is the most scary part is the high of the day. You notice that? The high of the day and the pivot is exactly the same level. Oh my goodness. So again and again, I say this, guy, we are probably not the only one in the world know pivot computation. But the craziness is that the accuracy is really scary. Look at it. The day high of the day is already computed on your screen. So which means that at 6 a.m. in the morning, you can tell anybody that there is a 35273 yesterday. That means when you are here, all right, you already can tell people that this number 235273 is already on your hand, on your this screen, and the market really reached there probably about 10 to 12 hours later. That is the scary part, and really I'm speechless. When I see this high, I was like, wow, incredible. Really, on hindsight, you just buy and you just aim here yourself, right? You have sold at the high of the day on hindsight. Okay, so scary, right? Now, how about this? This is gold. Now, yesterday, gold, I know I told you guys the pivot one is very far away, but by rule, you can buy. But the only thing, the downer is the KSI is green in color. The KSI is red in color. That is the downer. All right, that's a downer. So with that understanding here itself, wait a moment. Okay, as the KSI is red in color, the upside will be limited. Okay, so what do we see? It's very clear. If you believe in the system, this is the opening price, the pivot at the bottom. So CCRY, you buy, hit KTR +1, take your profit, and you go. And you go, because I tell you guys that the KSI is red in color. But if you try again, you notice that the market gives you a little bit, not much, and pull back. Then you try again, this time around, the market gives you no chance. Then after that, throughout the next few trial, it did go up one time, but the previous go up one more round. If you don't take profit in time, the market will take away from you already. So all I can tell you is this: when the market have above OP and above the pivot one, it's good to make sure that you take profits, okay? Because the KSI rate, the terrain is against you. Of course, not worth it. And plus, of course, we have two big sell-off day. Undeniable, the sentiment generally is a seller market. Okay, so that's what happened to gold yesterday. All right, I just saw the Hang Seng is still trading higher. It's now up to 26,700 already. Wow, look at it, amazing. All right, never fight the market, really never. Okay, all right, so let's look at the local news right now. What do we have? We have very interesting coverage here. This one is very good to read if you are like into bond yield. So the rising bond yield could be tied to the recent comments from the Federal Reserve officials. That's true. Definitely, we have Vice Chairman Richard Clarida. He basically is a dovish Federal Reserve, but he comes in and say that it's time to actually look at tapering. Wow, that is a dove turning to a hawk. So that is the first thing that the market got spoke. Then, of course, with Atlanta, Fed Rafael, and of course we have more like example. Not here. Okay, it's not covered here. Okay, we have more. Okay, so Clarida is a dove. You understand this? And he said to trim is already a very big hint already. And of course, today we have the CPI data, and if the inflation numbers are high, we could see the yield going even higher, which I suspect will happen. Then, of course, Fed Governor Christopher also said that the central bank should begin tapering. And Bostic also say that, all right? So Richmond also say that. So you can see that everybody, practically everybody, Eric, Rosengale, everyone is all saying that it's time to taper. So this time around is very different. Last time, most of them say no. This time around, most of them say yes. So that's the reason why there is a slight chance that the market may buckle on this. And of course, you look at the 200-day moving average. Now we see that the yields is now finally crossing above it after going down the last month. So is this a turning point, or is this going to be just a fluke move? I'll let you decide. But definitely, right, most traders are taking it seriously. They think that this 200-day moving average is very important. And of course, again, like I say, Clarida changeover is the most important thing now. So if Federal Reserve keep mum between now to Jackson Hole, and we see this is going to be a shock, but now they're telling you this before Jackson Hole. So kind of like telling you already to prepare for something before that day. So that is the reason why I kind of suspect that the market, the next 2 weeks, right, will likely be taking some profit soon, the next 2 weeks. Okay, not saying now, I'm saying 2 weeks. Okay? Okay, all right, got the idea? Okay, good. Okay, so Remember, I did told you that there's this level here, 1.5% to watch out for the 10-year yield. And you can see that someone also said that now. He said that 1.36 level is important, and the market seems to be going there. So see, I'm not the only one can read the chain chart. So everybody looking at 1.35 to 1.36%. Okay, so this is a good quote. I think at the end of the day, the market is going to take its cue from Federal Reserve, not the data. Indeed, the data is definitely to taper. But if the Federal Reserve Chief Jerome Powell say no, nothing will happen. So that's the reason why I say that, right? Jerome Powell holds the key to the whole thing here right now. If he refuses to let it go down, then there's nothing the market will go down at all. Okay, all right. So what are the reasons to stay bullish right now? I think there are many good reasons. This one, first of all, Santoli, one of the correspondents, he felt that, right, the Dow Jones the S&P got still further upside room to go. This is his chart. He felt that, right, this is a grinding path to 4,500. He felt that this will bring the market higher. And of course, he said that the percentage of issue above 200-day MA, although it has pulled off from the high, but it's still above the 80%. So again, you see different people, different way. Some people see that it's already off the high, so the market must sell. So some people say that, no, this is called support. The market may recover. So again, it's subjective, all right? Personal. So he felt that the market breadth is still not need to worry. It's just a minor worry. And S&P is still above the 200-day MA. And the market breadth is relatively on the positive side. And the VIX is still at about 17. So all these tells you that there's no reason to panic. And that's the reason why he felt that the upside is still fairly possible. All right. So if you guys think that he is a good, a good person to follow through, then this is what he's saying right now on this. Okay. Okay, then Jim Cramer is saying that it's pure idiocy that this whole stock market rally is because of the easy federal policy. Now he's saying that this is not, we should be looking at it more bigger. If you look at it, it's the business that's doing well. It's a positiveness of the COVID. Everything is because of the economy. He felt that, right, this 120 billion has a role, but it's not everything. He felt that, right, this is the main force is all the credit payment. We're talking about the infrastructure all recovering. These are the main force. They are just basically they are being dwarfed by all the Fed tapering and easy money policy. So that's Jim Cramer saying that he don't believe in this. He believes that it is the general market that's pushing up the market. So again, he's not wrong to say that. In fact, it's just that if you put the S&P chart and the Federal Reserve balance sheet and look at it from side by side, you will know that it's so interesting that every pullback is when the balance sheet is not there. And when the market balance sheet is pump up again, the stock market goes up. So you tell me that it's not related, I kind of don't believe it. But again, I cannot deny what you say is true. It could be the general market. All right. So these are the two people that are saying that the market is bullish for now. Let's look at the alternate market views and see what we have to offer for today. Okay, first of all, this is the cash market versus the Russell versus the Nasdaq 100. So you can see that towards the last 1 hour, you can see the cash, the small cap was being pushed up all the way to close near the high. So again, this is a very outright manipulation in the market. So that's the reason why I keep on saying that there is manipulation in the market. Whole day, the market press it down, then suddenly just 15 minutes window, the market go up. Okay, so it's very clear. Now, you look at it now, the US dollar momentum and the yield, you can see the dollar index goes up, the yield went up. So I've been telling you this, they are actually related, all right, in a way. So now the thing is this, the dollar is up because there is a chance of tapering. The yield is up because there is people getting worried about the current, the bond market. So yield goes up, bond price goes down. So when the yield goes up, right, that means that the market is getting a jittery on the bond market. That's why people take profit. So that is the reason why with these two side by side very clearly, it's very clear that the boys are actually positioning themselves for a taper very soon. So if you tell me that there's no taper, right, then you are not basically seeing what you're in front of you right now, which is the dollar index and the 10-year yields, all right? And of course, we can see that the implied Fed rate shows very clear that we are just marginally away from the expectation that there could be an interest rate hike, okay, right, before 2022. No, not this year, next year. Okay, there will be a rate hike by 2022 next year. Okay, all right. So that is something that you must take note of that. Now, this is the two charts that I mentioned here. This is the high yield credit chart. Now you can see that the higher credit chart shows the debt of the company is at the high risk of defaulting. All right, at the high risk of defaulting. These are the junk bonds. So usually you can see that, right? The when they keep on climbing and climbing, right, it's dangerous. But now recently it's actually breaking down. All right, the one in black is the junk bonds. The one in blue is the S&P. So you can see that usually it goes in line, but once there's a decouple, let me show it to you. Once you see there's a, when it decouple, right, from it, the S&P and the junk bond will go down. So can you see that again? Yeah, let's just see this again. Here we go. Yeah, can you see this? Yeah, somewhere around here. So now we are seeing the same thing again. The junk bonds now are moving away from the S&P 500. So that means by right, if we follow this chart, okay, if you follow this chart, you can see that we should be here. Because it basically stick to it like glue, right? It means that it actually goes in together hand in hand. So by right now, right, if you look at it, that means the S&P should be trading somewhere around here. And that's about 43.30 level. I repeat, it should be at 43.30 level. Where we are now, 44.30 level. So we are now 100 points away. I repeat, 100 points away from the fair value of the junk bonds. And 100 points will usually lead to about the Dow Jones have to go down by about 800 to 900 points. Okay, from where we are now. Okay, so this is the first thing to watch out for. This is the S&P relationship between the high yields and the S&P. Now this is the New York Advance-Decline indicator versus S&P. So again, we saw that the New York Advance-Decline is also off. So you can see that there is again a decouple right here right now. Usually they are always together. So same thing again, if you look at it, if in retrospect, we can see that it's somewhere about 43.60 level. So that means that whatever what you're saying now at 4,400 is definitely way above the current usual valuation level. That means usually should be at 4,350, 60 level. You're now 100 point above it. So if you believe in this, then of course there will be a pullback, and this is to my point is most likely will happen. Okay, all right. So this guy is suggesting 4,003 lah, but I'm talking about 4,360 to 340 level. Okay, got the idea? Pretty cool, right? Yeah, this is why again, if you need to have charts like this to give you a bit of balance. Last but not least, guys, this is where we are right now. I still believe that we are still on the way between greed to delusional to new paradigm. We are not anywhere near denial or return to normality yet because we haven't seen a big fall like this. Now, to have this happening, we must see an all-time high traded. Then we have people going really crazy about it. Then when it came down, people don't believe it. Then it will bottom out at a certain period. Then that is where it will recover. Then people say that, okay, things are good. Then the market will break down. Then we have the capitulation, all this. So we are nowhere near here at the moment. We are somewhere probably around this area. So traders, just go slow with your shorts, okay? Even though I will share with you all the good stuff, but we're still pretty far away from the so-called peak of the market unless we actually see it this week or next week. Okay? All right, so this is all the great information I shared with you today. I hope you enjoyed this MAO once again. All right, so today the office will be closed. We have some recording ongoing. I'll see you guys again tomorrow on MAO. This is Cal signing off. Have a great day. Bye-bye.